Westfield shareholders have welcomed the shopping centre giant's takeover. SBS Finance editor Ricardo Goncalves joins us now with the details. Ricardo, tell us, how did shareholders react to this news and how did the company trade on the share market today?
Yeah, shares rose 14%. So that's great news for Westfield shareholders because shares in the company have been on the nose since the most recent peak of $11.14. Reached back in July last year. Now, today's close of $9.66 is still below the $10.01 per share offer, but analysts say it's a good deal. From a small delicatessen in Sydney's west to a global shopping centre powerhouse, Westfield made Frank Lowy, a Holocaust survivor who migrated to Australia in 1952, one of the country's richest men.
He's been very dynamic, has been running Westfield for 57 years. It's had an amazing impact on the Australian retail space. France's Unibail Rodamco is forking out $32 billion for the 35 centres Westfield owns in the US and UK.
Maybe the price tag is slightly on the expensive side.
Expensive for Unibail, but good for local shareholders.
On a valuation basis, it does compare very favourably against other US mall operators.
Where in business, timing is everything.
Maybe selling at the peak, given there's an enormous amount of disruption taking place in the retail world.
That disruption comes from the move to online, with the likes of Amazon gaining a greater share of consumer spend and as shop owners negotiate better lease arrangements.
Well, traditionally, shopping centre rents have been 2 or 3 of the highest expenses a retailer would face. And that's still very much the case. However, the bargaining power has now changed.
The Westfield malls in Australia aren't part of the deal. They were shifted to a newly created company called Scentre Group in 2014, which the Lowys retain a small stake in.
And we're expecting to see institutional and retail investors move money back into the Australian property trust sector as a result of receiving some cash for their Westfield shares.
And in good news for retailers, consumer confidence rebounded to a 4-year high in December, according to Westpac and the Melbourne Institute.
I think they've been encouraged by tax cuts, by the talk of tax cuts, and of course the labour market remains strong. And I think there was a good feel-good effect from the marriage equality legislation.
If consumers feel good, they're likely to spend. It just depends whether it's online or in-store. And shares in Scentre Group, the operator of the Australian Westfield centres, rose 7 cents today. The broader share market managed to close higher for the 4th straight session, but only just by the close of 200 added 0.1%. ANZ followed the bank's lower. It has agreed to sell its life insurance arm to Zurich Insurance for nearly $3 billion. Fortescue did well, Qantas rose, and the Australian dollar is stronger against the majors. And speaking of currencies, the Reserve Bank Governor Philip Lowe spoke at a payment summit today, and Janice, guess what he called the fascination with Bitcoin? He called it speculative mania.
Well, let's wait to see if that bubble bursts. Thanks so much, Ricardo.